Hey everyone, hope you're all having a nice day. Today I want to go over how to pick high probability trades for each month. I've been getting a lot of questions in the comments section on many videos asking how I go about picking my stocks um, and digging deeper into them and trying to find any yield and good trades over a certain period of time. So before I get further into the video, please drop a like. That'd be really great. And make sure to hit the subscribe button and hit the bell notifications. I post all my trades here on YouTube for free. I don't have a paid Discord. I don't have a private group, nothing like that. And I show all real profit and loss. So yeah. All right. So the first thing I do when looking for a stock is looking at a certain period of time. So in this case, we can look at January. Since we're already into December, we might as well look at a January trade. Now, I already have uh, a stock or multiple stocks for each month already pre-planned because I already did the analysis, but you could do this on your own. It's You don't need to pay for any programs. I've actually found a bunch of free resources to do the research and backtesting. Although maybe the Thinkorswim backtesting part isn't free necessarily, you do have to deposit money into a brokerage account to get that sort of feature. But the first thing I look at is there's a couple ways I go about it. You can look at the top stocks um, in the New York Stock Exchange and the Nasdaq. So this is just a stock screener through TradingView, and you can see I have it sorted by market cap. So obviously the top company right now on the stock market in terms of market cap is Apple, and then Microsoft, Google, and so on. So you can go through each of these stocks, right, and try to find, all right, like let's look at Apple, right, and then go to stockcharts.com, which this is completely free. So you're going to go to stockcharts.com. Okay. You're going to go to charts and tools, and then you're going to come down to the seasonality table, and I'll just type in Apple, plug it away, and then I just want to do a 20-year back test. So I take this slider and set it to 20. You can see Apple, its best month is typically in July. So if I were going to put on a trade for Apple, it would probably be for the month of July. I wouldn't put on a trade for Apple in December or January, maybe March or October. I did put on a trade for Apple in October. Those are probably your best shots in terms of historical probabilities. So yeah, that's one way you can go about it. You could just manually plug away. I do have another site that's completely free. You don't even need an account. It's unusualwhales.com. So if you come into here, um, pretty much it's like this. It's showing you these statistics, but in a list form. So it's showing you all the stocks. So let's look at January, for example. Um, so like January, these are all the stocks, the performance for each stock in January, and you could track the certain amount of years, the average gain, the median gain, which I usually use median. I stay away from average because you can have 1 or 2 years that are outlier months, right? So you can have like a 10% gain in 1 month when typically the stock really gains like 4%. That's why median percentage is better to use. Then you can do the percentage positive months, right? So like you could see here, Lucid, right? LCID out of the past 2 years, which that's the only amount of data we have for Lucid stock. You can see 100% of the time it's gone up in the month of January. So you could set the percentage to like 70%, right, or 80%, whatever your liking is, and then you can set the market cap. So I like me personally, I like to stay at like a 20 to 50, like 25, 50 billion market cap. Usually when you go to lower market cap stocks, you tend to run into liquidity issues, high spreads between the bid and ask price. So, I mean, you can still have a high market cap stock and technically have wide bid ask spreads, but volume and liquidity is very important when trading because it can make or break you. So, yeah. So like what I do is I try to get the most amount of data. So like on stock charts here, which is also a great site, I do a 20-year back test. I think the furthest back test we have on unusual whales is like 16 or 17 years. So it's kind of, I use this site and this site in conjunction. Um, so yeah, but like if I wanted to look for a good stock in January, I would try to find, something that's been at least 16 years. You could see here, I could try 17. You can see nothing pops up with 17 years. So the minimum track years are 16. So all these stocks have 16 years of data. Um, I don't really put anything in for the average or median gain. I usually just sort by the median percentage gain. And then this is a important metric to put in. So like you can see here, like some of these stocks went up 75%, 68%, uh, you know, 75, and you keep going down the list. Um, I usually like to stay above like zero point 0.7, so I'd put in 0.7, 70%. And then market cap, I'd stay above like, I don't know, 25. So I'll just put in 25B. If I press B on the keyboard, it'll put in 25 billion for me. So these are all the stocks in the month of January that close in a positive value 75% of the time or higher, right? So if I just like sort by positive closes, you could see, like, I think this is Cardinal Health. So if I click on this, you could see Cardinal Health, and you could see the gains in January. Cardinal Health does really well, but you can see the gain isn't that great, right? 1%, 0.1%, 0.5%. A couple of years back here, you went up 16, 13, 4%, 2%. So like the gains on this, you would have to backtest to see if they're worth putting money into. Um, but like what I like to do is sort by the median percentage and try to find the highest median percentage because I want to find a stock that goes up, at least 70% of the time, but also has a sizable gain too, right? Because not only am I increasing my win rate, but I want to increase my reward, potential reward, by looking at a stock that does well in January at a uh, positive close aspect and a percentage gain. So Netflix for January, I am going to be giving out a little bit of freebie information here right now, but Netflix is my January trade. So that trade I'll be putting on in like a few weeks, probably on the 29th. I may actually put on the trade in January or January 2nd, I think, because I do want to close out my books for 2023. So, yeah, I may actually close LLY a little bit earlier just so the trade settles in time and I can close out my books and pay my taxes all in full within the 2023 year. Um, but that's a different conversation, but it's not a big deal. Um, so yeah, like Netflix is a good option. So now when I find a stock that has a high win rate and a good median percentage gain, I'm not gonna just add it to my list and go from there. Like no, now this becomes the second part of the analysis. We need to backtest within the options chain because just because you have a high win rate and a good gain per month or on a median basis doesn't mean that it's a good option or a good stock to risk money in because you can have um, implied volatility risk. Okay, if IV is too high, it may eat away at a lot of your gains. So you may be better off going with a different stock. Um, you can also have bid-ask spread risk as well. So that's where the back testing comes into play. So whenever someone asks me, oh, like so and so stock, it goes up 80% of the time in the month of January. Do you think it's good? It's like, well, it sounds like it's good, but I don't know if it's good because you know just because it looks good, uh, from the front page statistically, you still have to back test. So what I do is I go into my Thinkorswim and go to on demand. Okay, and in this case, we're gonna back test Netflix for January. So I'll just put in Netflix. And then I like to backtest. Now, Thinkorswim, the data starts to get sketchy. Well, not sketchy, but the fill orders start to mess up beyond 2015. So I just backtest from 2015. I get 8 years of actual options backtesting, so that's good enough. When you couple the analysis in here, right? If I put Netflix into here too, stockcharts.com, which I use with unusual whales, see January 70% of the time for Netflix. So 75. So when I use this in conjunction with this, and then use this as well on like an 8 year backtest through Thinkorswim, yeah, it's pretty good. It's good enough for me. I don't need to do any further backtesting um, to know if the options chain is a problem. So, all right. So let's say I enter the trade on December 31st, 2014, and we're gonna enter at the end of the day. That's just when I enter. You can enter in the morning if you want. It all comes down to preference. So now we're gonna put on this swing trade. So if you haven't seen my videos before, I recommend you watching them. Um, but I only swing trade. I don't do day trading. So yeah, I'm gonna pick 45 DTE or higher. So in this case, I'm not gonna go with the 44 DTE. I'm gonna go with the 51, and I'm just gonna put this to all. And then I try to stick with like the 45, 50 delta. So in this case, I'm gonna go with the 46 delta on Netflix. And I'll buy this. It's gonna fill, and then I'm gonna go to the end of January. And if you watch down here, you'll see the result of the trade. So if you bought Netflix in the month of January and held it for the entire month back in 2015, you would have made 411%. So not bad. And then I just close the order, it fills, and I go to the next year. So I'm going to go to December 2015, last day of the month in December. Go to the 45 DTE or higher, select the 45 delta, or whichever strike is closest to the 45 delta. Okay, so it'd be 46. I'm going to buy, go forward 1 month to the end of January when I close my trade. Let it buffer. You can see this one was a loser. We went down 98%. All right, and then like what I do is I just do this for each year to get a good idea of what the returns are and if there's any issues within the options chain, like with implied volatility, theta, which usually theta is not an issue if you stay further out of duration. So I don't run my options to 0 DTE, or really, if I'm in this trade for 30 days, the lowest I go is 15 DTE by the time I'm closing. So open this, 43 delta. And it's just rinse and repeat. It's kind of boring and mundane work, but it's important. Because if you don't do this and you're just going based off of this or this, you could shoot yourself in the foot, potentially shoot yourself in the foot if you don't know what you're doing. That's why it's important to backtest historical data and make sure that, okay, if Netflix goes up in January, there's a good shot of me making money through the options chain. So you can see here, this year we went up 92%. That's it. Like, I just keep doing this, and I know Netflix is a good stock, so I've already backtested this all the way up to current date, and yeah, that's it. So that's how I pick my stocks. Now I found Netflix by just running through this list here. I've recently found out about unusual whale seasonality list, but I highly recommend using this to really filter down and trade, find more options, because there could be other options here that are great opportunities, like Chipotle Mexican Grill, right? I don't know what this one is. Realty Income. Like there could be other tickers here that are potentially good plays. But in this case, I'm going with Netflix. So yeah. So if you have any questions, leave any comments down below. Please remember to hit the subscribe button. leave a like. I'd really, really appreciate that. That's probably the greatest thing you could do for me is leave a like on the video. And yeah, I do live streams. I do updates on my trades and closing and openings of my trades. I do some live trading on the turns of the month, but I don't do too much trading. Most of my work is done through analysis and back testing, which I think that's how every trader should be. Um, so yeah, but yeah, thanks again, guys, for watching, and I hope you all have a nice day. And thank you so much. Bye.